today we are absolutely delighted to have with us two distinguished scholars, but actually with a paper that is a contribution of four distinguished scholars from across the globe on a very interesting issue of whether changes in financial sector development can relate very strongly to intra-African trade. And I think there are both interesting issues, whether you look at it in terms of financial sector developments happening on the African continent, and also to look at the degree to which African countries are able to trade among themselves. And the researchers we are blessed with today will have their presentation made by Dr. Lewis Gakpa and Dr. Hugues Kouadio. But let me also take this special opportunity to specifically welcome Dr. Hugues Kouadio, who is the director of the Training Institute of Statistics and Applied Economics, ENSEA, with a center of excellence based in Abidjan, in Côte d'Ivoire. But he also is a partner, having signed an MOU earlier with the Center for Global Finance at SOAS. So we welcome you on this partnership. And Kouadio has, Dr. Kouadio has actually come with the strong team of researchers, including himself, Dr. Lewis Gakpa, who is here and has also actually presented a paper previously in this forum in the Center for Global Finance, who is a research lecturer and researcher at ENSEA, the Center for Excellence ENSEA, received his PhD in economics from the University Felix Houphouët-Boigny in Côte d'Ivoire, and published in many of the leading journals in economics and finance. He's been active also within the African Economic Research Consortium and in the International Development Research Center. Now, the paper is also a product of collaboration with the Professor Charles Ajasi at the University of Stellenbosch Business School in South Africa, and also a dear collaborator to a Center for Global Finance here, Professor Yusuf Somare at Roval University. So let's, once again, thank you, Dr. Hugues Kouadio, for following up on these collaborations of collaboration with the Center for Global Finance and bringing your esteemed eminence in the area of economics and finance. I should quickly highlight that Dr. Kouadio holds a PhD in economics and a diploma of advanced study in macroeconomics, modeling, and economic environment from the University of Paris, Panthéon-Sorbonne, the great university in Paris, and also many qualifications from ENSEA, of course, having mentioned as a Center for Excellence, globally supported and linked with the World Bank. So it's a great pleasure to have you here, guys. And without much ado, let me ask you please to go ahead and present the discussion on your interesting paper. Thank you very much.
Okay, thank you very much, Prof. Murinde. Thank you for all attendees, and thank you for giving us this opportunity to present our paper on the topic financial sector development in intra-African trade. This is a research collaborative project with colleagues from abroad, Cote d'Ivoire, South Africa, and Canada. And we are very, very, very happy to have this opportunity to present our paper on this forum. And in behalf, and I'm happy with this collaboration with Center for Global Finance, and I hope our paper will be welcomed by all the attendees of this seminar. So let me give the floor to my colleague Lewis Gakpa, who will go through that presentation, and then I will come if necessary. Thank you very much. The floor is to Lewis.
Thank you again, Prof. Murinde. Thank you all for your presence. First of all, I would like to point out that my level English is not good, but I will try to make the presentation in English. The paper is entitled Financial Sector Development and Intra-African Trade. This paper is based on observations. Indeed, a cursory look at the trend in intra-African trade shows that, although generally low, an increasing trend can be seen to have starting occurring from the late 1919 onwards.
Lewis, sorry, Lewis.
Yeah. Yes.
It's not moving. It's here on the change the slides.
Yeah.
Yeah.
The
Okay.
We'll change this on this, make it like just a bit introduction before changing the slide.
Okay. Yeah.
Okay. So it is from the same period that financial sector development began to improve substantially for most African countries. The important empirical question to answer is the following. What is the nature of the relation of financial sector development and intra-African trade? The outline of our presentation is like this. In the first point, we will present what do you know from the literature. Secondly, the question and objective of the studies. Third, the methodology, and we finish by present the preliminary results. Let's remember that regional economic integrations has long been perceived by African policymakers and the researchers as an important driver for accelerating and enhancing economic and social development. Indeed, it is widely recognized that regional economic integration can accelerate growth and development by bringing a range of benefits related to improve political cooperation, increase intra-regional trade, job creation, and poverty reduction. Recognized the importance of regional economic integration as a driver of economic development, African countries have adopted various measures to strengthen regional integration. The most significant one being the entry into force in 2019 of the African Continental Free Trade Area. But still is fights on the evolution of intra-African trade show that the level of intra-African trade still remains low compared to other regional economic community worldwide. For example, intra-European trade is 4 times that of Africa. The question is that, why is intra-African trade still low? For answer this question, many reasons are generally given in the literature. Among other, we can see the striking lack of national and regional infrastructure, the still too high cost of intra-regional trade, and the strong specialization of African economic in the export of commodities. In addition to these factors, an interesting literature indicates that access to finance can play an important role in this situation. This is especially true since one of the notable objectives of regional trade agreements is the need to improve the financial sector in member countries with a view to increase bilateral trade flows. Also, several theoretical studies have attempted to document how financial development sector can stimulate international trade. In particular, financial development is seen as a source of comparative advantage for trading economics and an important determining factor for trade flow. We can see the work of Kouadio and Badan, 1987, and Doe and Levchenko, 2004. Empirical support this link has been provided by the work of Bex, Claesen and co-author, Berman and Ericourt, and so on. However, our finding is that these analyses are rarely carried out on sample from developing countries, particularly in Africa. For the specific case of development country in general in Africa, there have been few studies that examined the relationship between financial sector development and trade. This study is largely focused on the relationship between financial sector development and openness trade. We can see the work of Yakubi and co-author Kedrem Rego. To our knowledge, very few studies address the issue of the impact of finance on regional integration. Expected the work of Ozabione and Nimasun 2019. For example, Ozabione and co-author and Nimasun, using an augmented gravity model, show that financial development approximated by credit to the private sector has a positive impact on the dynamic of intra-ECOWAS and intra-African trade, respectively. And overhand, Ozabione in 2019, using the same model, find that financial development of exporting and importing countries is detrimental to the enhancement of intra-ECOWAS trade. Given this inconclusive empirical result, the question of a relationship between financial sector development and African trade appears to be unresolved. So this study attempts to explain this ambiguity by making important contributions to the existing literature. Hence, in contrast to previous work, in this study, we use a broader measure of financial sector development so as not to obscure recent development in the African financial landscape. Indeed, over the last 2 decades, the banking and financial landscape in Africa has changed considerably with the expansion of cross-border Pan-African bank and an increase in stock market activity. We think that this rise of Pan-African cross-border banks, by facilitating the expansion of financial service among countries, could foster economic integration. On the other hand, Africa now has about 29 stock exchange instead of only 5 in sub-Saharan African countries and 3 in North Africa 2 decades ago. This ongoing development of financial sector in Africa could therefore have important implications for economic activity through the financing of the African private sector. In view of the above, particular interest will be given to cross-border banking flows and the development of financial market, whose contribution to the strengthening of intra-African trade, which we believe to be important, has never been studied in the empirical literature to our knowledge. Secondly, while previous works have focused mainly on the specific region bloc or on the African bloc as a whole, we go further in the studies by paying particular attention to the specificity and heterogeneity of African sub-regional bloc. We will investigate in this paper whether financial sector developments contributes more to trade integration in some regional economic communities than in others. Third, the studies goes further to explore the sectors through which financial sector development could boost intra-African trade. Recognizing that the development of agricultural and manufacturing sector is a requirement of enhancing intra-African trade, and acknowledging that African countries are lagging being in terms of private sector financing, this study looked at how financial sector development can contribute to improving the financing of agricultural and industrial activity, thereby enabling an increase in intra-African trade. Specifically, the impact of financial sector development, sector indicators on the agricultural and industrial sector, and that of this sector on intra-African trade will be assessed. Three communications are addressed in this record. The first is, what is the impact of financial sector development on intra-African trade? Second question, are the effects different across different regional economic communities? And finally, what the areas of propagation of beneficial effects of financial sector development to intra-African trade? To answer this question, the first objective of these studies is to assess the relationship between financial market development, cross-border banking flows, and intra-African trade. Secondly, we investigate whether financial sector development contributes more to trade integration in some regional economic communities than in others. In the study, we have chosen 3 main regional economic communities in Africa, namely COMESA, SADC, ECOWAS. The choice of these 3 communities is justified by the fact that, according to World Bank 2019, they are considered the most successful and dynamic regional integration arrangement with large import and export of financial and non-financial goods and services. How do we do it? Our sample cover all Africa countries where data are available. And the period of study is 1996, 2020. The main variable of the studies is the intra-African trade, financial market development, approximate by the stock market capitalization, the stock market value trades, and the stock market turnover. Following the work of Murinde and co-authors, cross-border bank lending as approximated by the total international claims on GDP. Our econometry models is follows. In the first time, we will estimate the panel data causalities between variable of intra-African trade and variable and financial sector development. And then we will use the we will use another specification model to test the two-stage least squares estimation. And finally, we check the robustness of our result by using Driscoll-Crowe method, New Way West method. This table summarizes the statistical properties of the variable. It is appear in this table that there are it is appear in this table that there is considerable differences between intra-African exports and financial development variable across region. And then it appears that region with the highest cross-border bank flows and financial market development also have the highest intra-trade. For example, COMESA and SADC country exceed the African average for cross-border banking flows and financial market development indicators, and only SADC exceed the African average for intra-African trade. In the second table, we address the first research question, namely, what effect do financial sector development indicators have on intra-African trade? To do so, we use the panel data causality test developed by Geodis and al. 2021 to test the direction of causality between financial development variables and intra-African trade. This test, which has been introduced very recently in panel data analysis, has the advantage of taking into account both heterogeneity and dependence between individuals in the panel. To implement the causality test, we first perform stationary tests to determine the integration degree of the series. The causality test revealed that the existence of unidirectional causality between financial market development indicators and intra-African export volumes. Secondly, we detect a bidirectional causality between cross-border bank flows and intra-African export volumes. These results show that the rise in cross-border banking flows and the increase in intra-African trade volume are in many ways closely related. Having demonstrating the existence of causality between our main variable, we then present the result of multivariate regression with controlling for other factors related to financial sector development and intra-African trade. We use an instrumental variable method double least square to control for endogeneity issues suspected in the literature between financial sector and trade. The results show that all financial market development variables positively affect intra-African trade. We also find that the cross-border banking flows variable, although having the expecting, is only significant in the last column. These empirical results support our theoretical intuition that the evolution of stock market and the rise of cross-border banking lending observed in recent years in the financial landscape in Africa have a positive impact on enhancing intra-African export. In the table 3, we test the robustness of our estimation using the Driscoll-Craze in New Way West. This estimator confirms our result obtained previously. The regression result confirm the strong positive relationship between the free financial market development variable and intra-African trade. Moreover, compared to previous estimates, cross-border bank flow now show positive and statistical significant coefficient in all regressions, hence confirming the positive influence of cross-border banking lending on enhancing in African trade. In the table 4, we explore the channels through which financial sector development could affect intra-African trade. To do so, we run panel data regression on the overall sample of African countries. The result show that the financial sector contribute positively to the strengthening of trade within the community. Okay. In conclusion, our results clearly show a positive relationship between financial sector development and the strengthening of intra-African trade as a whole. And the result reaffirm the strong positive relation between this variable. Furthermore, the results show that financial sector development affects intra-trade directly and indirectly through its impact on agricultural and industrial sector. These two sectors are shown to be indirect channels through which financial sector development could influence intra-African trade. Thank you very much for your attention, and we will be ready for the question.
Okay, thank you, dear Victor. So up to you now for any clarification or question. Thank you very much.
Yeah, thank you very much, Lewis and Director for excellent paper. This is very interesting. In fact, it raises a number of important issues. For example, on why is it that the intra-Africa trade is very low? Why is it that African countries trade less among themselves than they trade with the rest of the world? And there could be many reasons. Now, the one put on the table today is that it could be because of the supporting mechanism of the financial sector, like the financial system, including banks, capital markets, and other supporting institutions. And I think it's important because if you look at the structure of the financial system in Africa, you will appreciate that many African countries do not have specialized financial institutions that could support intra-Africa trade. They know that, for example, you would be thinking of, does each country have an export-import bank, an Exim bank? There is a Prexim at the African level, but what about for each country? You also think about a point that this paper has picked very, very, very well. In the paper, they mention cross-border bank lending. And I think what they are implied here is that the recent experience, say, in the last 5 years has been the support of central banks to enhance their payment system, cross-border payment systems. And the cross-border payment system, support, the trade, the cross-border trade. So this paper, the main finding of this paper on the relationship, the role of cross-border bank lending is very important. So you put a finger on the right issue. And I think in the paper there is implied also the presence or absence of specialized bank instruments, the financial instruments used by the bank that are used actively in international trade. You see, some of the instruments used, say, between, trade between Ghana and Europe may not be the same instrument that could be used between trade between Ghana and Nigeria. So I think there are many contexts of this paper, and I think it's gonna provoke a lot of many other papers that will continue to investigate this phenomenon, make some innovations, even including, for example, an issue that we have had for the last, for many years. We've had a challenge of accurate measurement of intra-Africa trade. And because most of the measurement is taken, say, for example, for gravity models, taken 2 countries. So you do on a bilateral, pairwise computation, okay? And so in the pairwise computation, what is lost out is, for example, the trade within a region like COMESA or ECOWAS. So interesting paper. Let me invite a discussion from the floor. I can see one hand up already from Professor Joshua Bo, University of Ghana. So, and followed by Professor Dark Willem Tiverte from ODI and SOAS. So, Josh first and then Dark second.
All right, thank you, Victor, and good afternoon to everyone. Please, can you hear me?
Yes, so we can hear you very well. Thank you, Josh.
Okay. So let me commend the authors for an interesting paper and good presentation. Louis, even though you complained from the beginning that you couldn't speak English, but you communicated. I think that's the most important thing. I think it's a very interesting paper, especially given the initiatives to try and promote intra-African trade. Now, the standard literature or some of the works that have been done in this area in terms of trade development generally have looked at how foreign direct investment comes into the local economy and then interacts with local financial development to drive trade. Okay, so then you look at trade development in general. But I see that you are particularly interested in intra-African trade. So I see that the thinking here is developing local financial markets can help in promoting intra-African trade. But we also know that financing is a major constraint in many African countries. It could also be that there are other factors limiting trade development within the continent, among countries within the continent. It may not be only finance. What about the role of institutions? So I was thinking that you may want to consider other variables in moderating the relationship between financial development and trade. There could be other factors at play, not only finance. So it would be good to consider those as well in your paper. Thank you.
Oh, thank you very much, Josh. Very constructive points and suggestions. I don't know whether you would like to respond to this, Lewis, or?
Thank you, Prof. Joshua. It is interesting question. Concerning the institution, in the control variable, we have used the institution. we have used the institution variable to measure the role of institution in the reinforce of intra-African trade. We have used the institution variable.
Okay.
Okay. This is to say that we have think of that factors, and we realize that this factor play a big role in reinforcing the effect of the local financial sector development on on that paper. So welcome comment, and maybe we should highlight it in the next presentation.
Thank you very much, both for the response, and to Josh once again for raising some important issues here. And of course, it may well be the case that even institutions interact with given variables. So that could be further explored. Yes. So next is Doug, Professor of Practice here in the Center for Global Finance at SOAS. Doug.
Well, thank you, Victor, very much, and thank you to the authors for a really interesting paper, really interesting topic, and I got lots of questions, and I suppose there are lots of extensions and so on, so I will be very interested in it. But let me just highlight a few, and one just links into the previous questions about what are the other control variables. So when we think about intra-Africa trade and compare it to other regions, and we always say, well, intra-Africa trade is low. It has many reasons, I suppose, right? So, I mean, if GDP, for example, so the level of development is simply one of them. So the high level of income, so you need to account for that. But there are, of course, others, and in Africa, the trade-related infrastructure is always a key barrier, but also tariffs, right? So this trade policy, like tariffs, are still high among some of the countries, and I mean, we're actually working with national implementation committees of the ACFTA and also the ACFTA Secretariat at the moment, also to make it all happen, make trade happen, and that tariffs can still be high. There are now a couple of countries that have now had a so-called guided trade initiative where they have dropped tariffs now. And of course, within the region, there are supposed to be zero tariffs, but then there's also amongst regions. Then you've got non-tariff barriers as well. So standards, for example, are a major constraint to intra-Africa trade. I'm sure you're aware of all those, but the question is whether you could, of course, account for those. That's one question. Then I suppose the second question is a bit about data. I think you use bilateral trade data, but when you think about finance, measures for finance, it is not necessarily bilateral, right? So it's just general capital market development and so on. So the link there is not perhaps direct, but it is indirect. And I suppose that raises two questions. One is that, of course, there's an identity there, so that trade needs to be financed, right? So whenever there's a trade flow one direction, there has to be a finance flow the other direction. So that it's almost like an identity, and then of course you can have financial sector development in order to finance that. But there's almost like an identity there, and it isn't. Of course, that's in a two-country world, and we're more countries, so it's much more complex than that. But it would be useful perhaps to think a bit more about the pathways, to set that out in conceptual terms. Is what types of finance are important? So trade finance, of course, is important. So maybe you can think a bit about that. And my understanding is that a lot of trade is actually financed through London, right? London finances actually a lot of intra-Africa trade, even though we may not know it, but that seems to be the case. And but trade finance, and there are now many extensions to sort of food security. So if you think about Somalia, for example, how do you get food into Somalia? It needs to be financed. There's no trade finance, so it's very difficult to get that from, say, Kenya into Somalia. So trade finance. But the other, of course, is consumer finance. So if you can lend for to buy a car, there may be trade even within Africa if there's intra-Africa trade. And then, of course, there's for companies as well. So finance going to companies, so to different sectors that may then stimulate them to trade more intra-Africa. So I suppose you may want to say a bit more about the conceptual pathways, and if there is a bit more of a, because the link is quite general. You have general finance development, and you got specific trade. So maybe you can say a little bit more on those particular links and the pathways through which you think finance affects trade. But overall, I think this is very promising, and it's also really important to sort of understand that in intra-Africa trade liberalization, we shouldn't only be thinking about trade in goods, but also trade in services, and how the two are linked. And I think that's really important. Thank you very much.
Thank you very much, Doug, for those very important observations. Indeed, financial liberalization in many African countries occurred a couple of years ahead of trade liberalization. So it is until possibly the introduction of WTO from the GATS that's occurred. So the mechanism, the conceptual pathways or transmission channels would be a wonderful, great point. Yeah. Lewis and Kouadio, any comments, response?
Okay, thank you very much for that comment. This is a very good, useful comment. Obviously, I mean, this is regarding the conceptual pathway of finance. I think this is a useful comment. We're gonna think of it. We have not, as you note very well, we stay on the global way, and this is a useful comment. We welcome, and we will make it in developing furthermore and commenting our paper. So thank you to that one. So maybe we will add something.
Wait, thank you, Prof. Dirk. Concerning the level of development variable, we have taken in the control variable the GDP per capita to capture the level of development in country. Also, you have used the infrastructure variable to capture the level of infrastructure in the country. Concerning the last point, the channel, I think that it is a good observation. When I think Prof. Yusuf have
already mentioned it when we were presenting in our group. So this is, as I said before, a development we're gonna make for improvement of our paper. Thank you.
Thank you.
Thank you. Thank you very much. And I think it could be even this is as mentioning that this paper could be the starting point of so many other papers going forward. So after tracking down the causality by variate or even univariate causality, then one can then embark on a purely a conceptual, theoretically based paper on looking at the transmission mechanism. The question of how developments in the financial sector are translating into the growth of intra-African trade. That would be a second paper that will be presented here later on by the same team when they have taken, or even could be this is the basis of joint work from the people making the presentation. Maybe that will be a paper between ENSEA colleagues and ODI. Yeah. Okay. So that's kind of okay. Jeffrey Igedosa, who is a PhD fellow, a very prolific guy. Jeffrey, your comments.
Yeah. Thank you, Louis, for your presentation. Very interesting topic. My comment is a bit connected to what Joshua and Dirk just said about the institutional environment and what Dirk said about trade is finance. You know, when you look at the countries that are involved, it's almost difficult not to consider informational environment when you thinking about this sort of topic. So I was wondering whether you look at how, I mean, the role of information asymmetries, because we know that one of the problem with trading is that where there is limited flow of information, bad trades are generated. So I mean, there are so many African countries where you have these multinational credit bureaus that share information across these countries. So I think that would be one of the institutional factors that you can consider, the role of asymmetric information. Thank you.
Well, thank you so much, Jeffrey. The point you mentioned is absolutely helpful, high quality. When we look at the information, the quality of information, credit bureaus, that helps not only in the financial sector development, but also informing companies that are involved in trade. So that's a very important variable that could be considered for including in this paper. Yes, I can see Isop. Yeah, Isop has a hand up, but Isop is also actually a co-author of this paper. So welcome, Isop. Isop, please go ahead.
Yeah, thank you very much, Victor. I mean, I'm sorry because I was on my car going to my office actually. But basically, thank you very much. I mean, for the opportunity. I mean, you give us to present this paper, and also thanks a lot for the comments and the suggestions. Actually, this is basically the first draft of the paper. As you can see, Victor, I'm kind of on my way to the office actually. Okay. Yeah, basically, as I said, this is the first draft of the paper. Then any comments, suggestions are very welcome actually for us to improve on the paper. Just few comments I would like to add is basically this paper, we come up to this idea when you look at the dynamic actually on the African continent. First of all, we can see there has been a big tendency of cross-border banking in Africa, whereby you see, for example, banks from South Africa going in East Africa, banks from Kenya, for example, going in other East African countries, or basically you can see banks in Morocco coming to West Africa and so on. Then we know that in those dynamics of the banking, cross-border banking, there are many explanations, right? This can be driven by trade, it can be driven by other things, actually. And then we really wanted to look at it with this new dynamic actually in the cross-border banking, which is basically the development of finance. Can it actually have an impact also on the trade among African countries? And beside that also, we have seen recently actually also the dynamic also on the stock markets in Africa. For this project of interlinkages of the stock market across Africa. This was under the guidance of the African Development Bank and African Stock Exchange Association, actually. Then all this dynamic can kind of explain some of the dynamics going on the continent. Then we really ask ourselves, right? Basically, we can see all those dynamics, actually. But as those dynamics have any impact on really trade among African countries, actually, intra-trade, because we are talking a lot about actually the African integrations, right? I mean, we are talking about the African integration. Then it will be interesting to see because financial integration almost started, I will say, before many of those integration projects and so on. does that financial integration has any impact actually on the trade integrations, intra-regional trade. And of course, I mean, thanks to a comment, I mean, made by Tiveldi, I mean, at some point of time, of course, in terms of finance, we do know that finance is a constraint, but the type of finance also is also important, actually. And this is related also to Jeffrey's also point, actually. Basically, in terms of financial infrastructure, it's not only about quantity of finance, it has to do also with the quality of finance and the way finance is delivered also, actually, in those countries. Because basically, we have trade financing, we have lending and so on, but beyond that also, even if we have to do trade among African countries, we have to come up also in terms of a payment also. How do we make the payments, I mean, among African countries, which actually can be cost reducing actually. Then the financial infrastructure also is very key actually to make real trade moves actually and improve, I mean, the quantity of intra-regional trade actually. And then, as I said, this is the first paper, I mean, we started actually, and you can even see that the financial sector development variables, we have actually the stock market, I mean, volume, we also have the credit, and also we have variables on the global lending of those banks actually. But we really want to go beyond that also actually to capture other measure of financial sector development. We have already discussed those ones actually, but we need to bring in, I mean, other measure of financial sector development to go beyond those traditional measure of financial sector to be able really to capture all those dynamics actually. Even talking about finance, we can also talk about financial innovation actually these days actually, right? With the development of these fintechs and so on, which actually make payments much easier actually, and then which can also help actually in terms of intra-regional trade, I mean, in Africa actually. Then we really need to go through those other dimensions of financial sector development beyond the traditional measure of financial sector development and so on. And I really agree with the comment that has been made on those directions actually. Okay, then I will stop here, Victor, and then I mean probably there are other comments, and then probably I can come back. Thanks.
Absolutely great, absolutely great. And in fact, since this meeting is being recorded, what you have said would fit directly into a great introduction for this paper. There has been growth of Pan-African banking revolution in Africa. Is this revolution translating into an intra-Africa trade revolution or growth in Africa, intra-African trade? This is a very important question. And I like the way you extended the discussion, even in the paper, and being futuristic, to look into issues like, the role of fintech, financial innovation, and the way it translates into growth in trade, and the financing of trade and the actual cross-border trade enhancing among regional blocs. If we continue along this discussion, basically, this is not only one paper, but a couple of papers. If we continue along this debate, this is a large-scale research project that would be of great interest to African Union, which is supporting the African free intercontinental trade area, but also of institutions like Africism, which is basically to finance trade, and to set up Africism that basically the answer is in looking at how the Pan-African banks, this growth, phenomenal growth in these banks, are growing at the same time as trade is also growing. So yes, I think this meeting is generating the paper that this paper has generated could be actually generating also a large research project that is divided into various streams that go into specific issues. And the econometric work, statistical work you have presented here is just a great starting point for this discussion. So thanks, Isof. Now I can see a hand up. Richard, you have your hand up.
Thank you, Prof. Well, congratulations to the authors. Wonderful paper. Just to add to some of the comments from the previous speakers in terms of controlling for some important variables, I was thinking whether the authors considered the heterogeneity in terms of the different countries in relation to culture and religion, and also language barriers, because these are very key elements in terms of trade, where some French countries and English countries, the differences may actually account for the trade, the limited trade, and also in terms of the cultural and religious fractionalization. These are very important variables I think the authors can consider. Thank you.
Yeah, thank you very much, Richard. Absolutely useful comments. We had
Thank you.
a slight Tumine, but I think he's dropped off the meeting. So yeah. We'll follow him to get some comments. So let me see. So we have Richard. Richard has just given the comments. Let me see. In the chart, let me see whether I think we've a comment in the chart. Yes. There's a comment in the chat from Doug. Do you want to come in again, Doug? Yes, I agree with what you are saying. Absolutely, yeah. Do you want to talk about it, or?
Well, it's fine, because we talked about heterogeneity across different types of countries and so on, and we talked about different types of finance. But you can also think about different products, perhaps, as well. So the interesting point, and I was talking to David Luke yesterday, and he's got a new book out and it's been reviewed. And he basically also says, and what we know is that intra-Africa trade is different than trade between Africa and, say, the EU or China. So it is more composed of manufacturing, and less natural resources, right? So there might be interest to see which finance are important for it, because it's different flows. So you may also compare different finance. So if you have intra-Africa trade, you may also have extra Africa trade, and whether finance is more, certain types of finance are more important for intra-Africa than other. And if you can do it by trade, and dots should perhaps allow you to sort of differentiate amongst sort of agriculture or raw materials versus manufacturing products as well, then you could perhaps also think about that distinction. But it's just another extension. Of course, lots possible.
Yeah, thanks, Doug. I think these are very constructive suggestions. The work started more or less like an econometric exercise, but actually, if we contextualize the African scenario on the financial system and then the kind of trade, that will give this work absolutely great relevancy. And I think, yes, it is a viable research project. Absolutely, yeah. So we'll find ways of extending this discussion this afternoon, because it is generating quite a lot of ideas, and very timely so, both in the current trends in the banking sector, and also in trade with the growth of the regional blocks and going intra-African trade, and also in a futuristic way with the innovations both in trade and in finance, how this could happen. As you know, one of the projects of the Center for Global Finance is on bilateral trade in fintech between UK and India. But actually, there's so much bilateral trade in fintech between Kenya and Ghana already. So there are areas of so not only trade in goods, but they are trading in financial technologies and some of the new apps and software. Yeah. So this, I think, is only the start, and great work for you, for the ENSEA team, together with the collaborators, Isofa and Charles. Let me see. I'm not sure whether I have any comments. If no, I think there've been great comments already. I have said 2 pages of notes from this already from this kind of discussion. And of course, we have the recording, so that will be a basis for further discussion, maybe in terms of how do we go from here. Of course, the obvious is this paper is going to be published. Okay, it's going to be a great paper, and ESOF has rewritten the introduction. I will just get it right, type it in, just introduction. It motivates actually why this study is important. Okay, and then the rest of it follow. The econometric work is just a kind of tidying up. We've done quite a lot of sophisticated statistical testing and robustness testing, I think, to follow. And searching for a unidirectional non-reversible causality as one of the big conclusion. Then there is, of course, the issue of the conceptual transmission for how this happens, what really happened. That could be maybe a extension on a paper. Then, of course, again, this could even be done at farm level data, with farm level data, where you are looking at the companies involved in international trade and segregate between foreign banks, foreign companies, and then some indigenous companies, see how they are trading cross-border. It's a large project. Maybe let me give you the opportunity to summarize. I don't know who is going first. Up to you, Lewis, Kouadio, Isof. Your last parting words as we close the seminar. Who wants to go first?
We will let Yusuf conclude, but I will take the floor in first time just to thank you again for this opportunity you give to us to present this earlier version of our paper on that topic, and all comment very, very, very useful. And as you mentioned, this is like the departure of a big project in research, and many comments are set way for improvement on this session, but also another paper to go through on it. And for sure, maybe we will have another opportunity to present maybe a second or the third version of that paper, and with more comment and more narrative on the topic, beside our econometric method, robust econometric method regarding the theme we present here. So thank you again. Thank you for your attention, and I'm very, 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 very happy to be part of that seminar. Okay, thank you.
Yeah,
Thank
okay.
you.
Thank you.
So,
Yeah,
Lewis,
thank you
do you
very
have
much.
something to add before I call upon Yusuf to wrap up?
Thank you very much.
Okay.
For the opportunity that you give us to present our paper. It is very interesting seminar, and all observation that we have received will help us to produce a scientific paper with a high quality. Thank you very much.
Thank you, Lewis. Yusuf, you have the last word.
Okay, thank you very much. Thank you very much. I mean, thank you. I mean, I would like to thank really Lewis and also, I mean, Kouadio, I mean, at ENSEA for a good job they did actually, basically on presenting this paper. And Victor, of course, as always, actually, thank you very much for the opportunity. And it's really always good to find good, I mean, friends. I mean, all around Joshua. I mean, I can see, I mean, the Activate Day and so on, and the others actually, always good like that. Let me just summarize quickly. I mean, really the message we wanted actually really to convey through this this paper, although this is really a work in progress, actually, right? As I said, this is why we wanted to present it, to get the feedback from the audience, actually, in the way forward, then we can improve really on the paper. Basically, we were interested in looking at really financial development and the intra-African trade. And I think this is a good opportunity to discuss this issue right now, as we are really moving toward really implementation and successful implementation of the African continental free trade area, actually. Then I think it's time to sometimes stand and then to ask a question to see what type of really financial institutions probably we need in our countries actually to be able to help really intra-regional trade. What type, actually institutions, what type of financial infrastructure is needed in Africa, in African countries, actually to be able really to sustain that really continental trade, among, African countries. I think this study will contribute into that, in the way forward, actually. I think, if we can really find out, actually, the financial innovation going on in Africa, which is really unique with mobile money and so all this fintech development and so on. If we can really see how that actually can contribute in terms of development of intra-African trade, or the way we can shape really finance in Africa actually to be able to move forward in that direction, I think that will be really something, really good. And as we go along, actually, we do know that in terms of regions also in Africa, Africa is not one size fits all. Actually, if you take ECOWAS, SADC, and COMESA, these are not really the same, and there are differences among them, actually. Then if we can look at some of the differences among the regions, actually, to really leverage on those differences to see how we can bring it at the African level also, this is something we want to look at in this study. And actually, to finish on that, the sector, right? We do know that, of course, we do know that the type of trade taking place in Africa is not exactly the type of trade taking place between Africa and the rest of the world. Then the channels we want to explore is also the sectors, actually. From which sector, actually, those banking sector, those financial sectors are contributing more in terms of developing, the intra-regional trade, and which sector are more concerned. And then from that, if you can really bring, more policy recommendations actually for African decision makers, and also for outside people who are looking at Africa, actually, development partners and so on, that will be really something wonderful we want to achieve with this one, actually. And then again, Victor, thank you very much, for the opportunity actually you are giving us, and also thank you very much for all the people who actually listen to us and also are giving us comments actually. And then if you have comments and even have this the seminar, please, send us the comments actually as we go along. It's better for us actually to have a lot of criticism now than having the criticism when we submit the paper actually. Then the more criticism, we can have now to be able to improve the paper, that would be wonderful actually. Then again, thank you very much, for the opportunity. Yeah, and I'll stop here.
So thank you indeed. Yes, Hugues, Lewis, Issouf, and Charles, who is not here but is also a co-author. And it's been a great pleasure. And you took very well up the challenge of presenting the paper in English. I think that was a great stride because if you asked me to present any paper in French, I don't think I would do anything. So possibly Center for Global Finance will respond by arranging simultaneous translation in the future by investing in this facility so that it can heighten, of course. But of course, you've done an excellent job in terms of presentation and also the paper. It's a great paper. You definitely get into a journal. And we'll then also call upon seriously this opportunity that something could be done and is an extension of this work and explore all the areas that I mentioned and which Issouf has also mentioned. And bring on board, I think Dak mentioned the work that is taking place, some of the new books coming out on this aspect of trade. And we just bring in, rope in the financial side together with trade. Colleagues who are working in this area like Andy McKay at SADC, and also David Luke, who is the new book is coming out, How Africa Trades. And I hope we shall launch this book here, the Center for Global Finance, and then current this conversation. David Luke is a professor at LSE. So I think this is of great interest. and we indeed will try to carry this work. Sorry, and I did mention your name, but I know that this is where your group in your group in trade meets with my group on finance within the African Economic Research Consortium. So we will have some further discussion bilaterally after this seminar. Yeah. Thank you very much. Thank you, all of you. Thank you for this great discussion today. Thank you. See you next week.
Okay,
Okay, bye-bye.